Hey there, it's Will. I'm going to go through the markets again and talk about some areas that are doing okay considering the state we're in right now. So, as I usually do, I've been predicting, or I've been talking about the downtrends of the markets based on the charts that we have, and I'm using TC2000. If you'd like to get a free trial or $25 off purchase, you can check out the link in the description below. I've got the gold plan with US real-time data so I can see the real-time price changes. And right now we're in the pre-market. And so you can see this red candle right here. This means that it started here at the top of the candle and it's right down here at this point. So that's why it's red. It's a down candle. And you'll see these little wicks on top or bottom below. And that's where it gets to during the day. So it's the open and the close is the body of the candle. And so I've been talking about this downtrend below the 50-day moving average, which is this blue line, the 200-day moving average, which is the red line. And you can see that, we've tried to get up above the 50 a couple times and then it failed. And now it's heading down this way. And so we've got this support on the Dow Jones. Support is like where the price has reached in the previous times and it's hit many, many times. So this is, a sense of strength of support because you've bounced off of it many times and even before. So if it's heading down in this direction and we see a reversal there, that would be a key point. If it breaks down below that, you'd have to look at where the next spots would be. You pull back. You have one down here where the initial drop was. Or no, that isn't it. There's a previous low point here. You can see the wick of this drop got to there. But so this is why I don't try to get in early when it starts to come back. I don't really often try to get in here because of the 50-day and the 200 are right there, which are congested areas of resistance where it has to get through those points. If we look at the S&P 500, it's a similar situation. A couple times it almost got to the 50. We're in a down sloping 50-day moving average. The 200 has been broken twice. And now we're heading down and, there's resistance. There's support here. So if it gets down to that point, you'd want to see if it supports it. The momentum here, similar to Dow Jones, is below zero and it's sort of crossing back down. So then if we look at the Russell 2000, this one has been in a long-term flat period. It had a bit of a breakout and then it reversed and went down. So we're kind of back in that range. I don't think it's doing too well here. It had a bit of a recovery here, but there's a 50-day right there. There's this line of this slope of downtrend here that would have to get through as well. So that one's got some work to do. And the Nasdaq, similar to the other ones, this one tried to break above the 200 a couple times, got rejected. It's in a downtrend. So I've got the line drawn across the tops of the candles and we've gone down. And there's a resistance here, support line here nearby. And, we'd have to see if it supports there. Momentum is below zero, so it's negative and it's heading up here, but it's very weak right there. It doesn't have a strong recovery like this one when you see it cross back over. So it's just kind of crossing almost back down again in a negative sense. So with the overall market's not doing great, I wouldn't look generally for long trades like stocks that you think are going to go up because of this. There are inverse ETFs, for example, PSQ. So that's the short of the Nasdaq. So you can see here, it's above the 200 and it's got a green volatility stop. So it's in an upward, it's in an upward direction. SH is short S&P. So we're right at the 200. So that's a tricky spot because, it's got to get through that. But we're in an uptrend. You can see how we have higher lows I can draw a line with like this. It's just that we have the 200 here, but we are heading upward. Dog is the inverse of the Dow Jones. Same thing. We've gotten above the 200 and there's an uptrend here. So, but it's quite emotional. You see these ups and downs. We're not in a really nice state for swing trades right now because, you know, the volatility and the uncertainty with various things going on. So that is an option. There's other ones you could look into, inverses of. There's a Bitcoin in Canada, BITI. I don't like the look of the chart right here, but there was a period of a nice uptrend in the Bitcoin. The ARK, if you wanted to short the ARK, Kathy Wood's ARK Innovation in ETF, there's a fund in the US called SARK. This one is looking like, you know, it's dropped a lot already, but this is looking like there's a green volatility and green bar. And, you know, that does look like a potential continuation. But that one's, you know, because it's dropped a lot, the tech has gone down so much, but this does still look like it has room to keep going. The other thing I wanted to mention was, what I do is I scan all the ETFs for special things like being above the 50-day moving average and having green volatility stop and stuff like that. And so that filters out a lot of stuff for me. So in, you know, I mentioned this in previous videos, but oil and gas was looking good. It's pretty high right now, but it's right at a point. It depends what happens with international issues, but you know, it had a really good run, but it's been very strong. And I mentioned like agriculture, like in the States, you have DBC, commodity tracking. Look at that. So that's what you ideally want, is a really nice run up like that. Metals and mining, like copper and stuff like that, is in a nice uptrend. It's broken above a bunch of these resistances. So there's some commodity stuff. RGA is another commodity. Corn. But the one that I wanted to talk about was the gold mining. So this is broken a long downtrend. I drew a line across the tops for quite some time, and we've broken through, and it just so happens that we're now broken above the 200-day. So, and you can see from momentum, we're above zero. That's a strong momentum. But at this point, it's kind of going parabolic, so I wouldn't be buying it in. But keep your eye on like gold, miners, junior miners, and even gold itself. But a lot of times you get excited and then it gets beaten down again, so people get demoralized after a while. But with inflation and sort of foreign issues, you know, that's the question whether it'll last a long time if that gets resolved. But with interest rates going up, you know, all that stuff. So I wouldn't jump right in now because of this, just the way it's vertical like this. But, and ideally, like, you know, you get to the 50 getting above the 200, but we're in a nice uptrend and broken a really big downtrend. Another way to look at these things for a little bit of a longer trend is go to a weekly chart. So on 2C2000, you can click on this up above this menu. You've got 10-minute, 30-minute, and 1 hour. You can go to weekly chart, and this shows it really nicely where we broke a nice downtrend and we've broken above. So we're actually above the 50 and 200 in terms of the weekly. So that was that would have been a good spot. The week before this week, where you see this green volatility stop. You probably wait till right near the end of the week, and when you see this, you could get in. But this should, this, and you can see the momentum that is slowly cutting close to zero here. So this is looking very good, like it's going to potentially break out in a weekly basis. And in the past, there was quite a huge trend. since 2019 up to 2020, that's 106%. So that's like a 2x. So we'll see what happens again, but it might be time to get into this scenario for. So I would just as an entry point. I don't really like these big vertical spots, but that's pretty much all I wanted to say. Is just to keep an eye on those types of things. So it's like commodities, metals, and gold, stuff like that. I'm waiting for tech to turn around, but it's not happening right now. So if you want to get TC2000, check out the link in the description below. It'll help me out, help out the channel. You can get a free trial or $25 off your purchase. And it's a great program. I use it all the time. It's unbelievable for scans and alerts and the charts and stuff like that, and finding good things to buy. So hopefully that helps. We'll talk to you guys in the next video.